The company have issued 10,000 shares where the public have applied only for 9,000 shares. That is known as under subscription. Equity share allotment account data to equity share capital account. You are going to transfer that allotment money to capital account, that is equity share capital account. So reissuing can be done at discount, but normally the company will not issue shares at a discount unless it is a sweat equity shares. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram PU College, the Temple of Excellence, Mysuru. My dear students, today we are in the 7th session of chapter 1, that is from part B, Accounting for Share Capital. Already we have discussed many of the problems and I have told you this is a very important chapter and you can expect a 100% 12 marks problem on this particular chapter. So let us quickly recall what we have discussed in a previous session. So in a previous session, as I told you, I have solved a problem on issue of shares. So we have solved different types of problem when the shares are issued at premium, when the shares are issued at par, and when the shares have been oversubscribed, under subscription. So all these we have learned. In today's session also, and this would be the last session of this particular chapter. So here also we have, or we shall discuss a problem with different adjustments. Now go through the problem here. So this is a problem where it is under subscription and it is being issued at par. Now what do I mean by under subscription? So the company will issue shares to the public. It doesn't mean that all the shares have to be subscribed by the public. In the sense, all the shares have to be purchased by the public. Now if you see the problem, the company have issued 10,000 shares. But how many shares the public have subscribed? That is only 9,000 shares. That is below the actual value or below the actual number of shares that is been issued to the public. So it is below than the issued shares. That is known as what? Under subscription. So if it is more than what has been issued by the company, then it is known as what? Over subscription. So in a previous problem, we had solved a problem on oversubscription where the company have issued certain number of shares but the public have purchased more than what has been actually issued. That is known as what? Oversubscription. And this is a problem where it is under subscription. The company have issued 10,000 shares where the public have applied only for 9,000 shares. That is known as under subscription. That is less than the shares what has been actually issued to the public. Now go through the problem here. ABC Company Limited issued 10,000 shares of rupees 10 each. So what is the value of each share? 10. Payable as follows. Now let us see how this 10 rupees is being paid by the, or what are the stages in which they can recover this 10 rupees. So that is 3 on application. So 3 will be on application, 3 on allotment and 4 on first and final call. So this is how they are going to collect the 10 rupees. And I have clearly given it is issued at par. In the sense the value is same. So the share value is 10 rupees and it is being issued at 10 rupees only. In the sense it is same, so it is issued at par. If it is more than the issue price or more than the face value, then it is called as premium. If it is less than the face value, then it is called as what? Discount. So you will be knowing about it because in the previous session we have already discussed about this particular problems. Now, so this is a problem where it has been issued at par. The company received application only for 9,000 shares. So what do you mean by that? It is under subscription. Actually the company wanted 10,000 shares, but what did the public do? The public have not purchased all 10,000 shares. So they have subscribed only for 9,000 shares, which means that it is under subscription. And all these shares were allotted and the money duly received except on first and final call on 400 shares. All the 9,000 shares has been subscribed by the public, but all the shareholders have not paid the amount, the first and final call. So they failed to pay first and final call on 400 shares. These shares were forfeited. Of course, we know when the shareholders does not pay any of the money, then the shares will be forfeited or we are going to cancel those shares. So the company decided to cancel those 400 shares and reissue to Ram as fully paid up at rupees 9. Now, the actual value of the share is how much? 10 rupees. But at what price they have reissued? At rupees 9. So, it means what? 1 rupees is discount. Okay, so hope you are clear about it. So, 10 rupees is the value of the share where they have reissued at rupees 9. It means that 1 rupees is discount. So, give journal entries in the books of company. So, already we know there are 9 entries to be written and each and every entry will be of same type, but we have to know how we have to write the amount for each and every entry. So, we know there are 3 stages here: application stage, allotment stage as well as first and final call. Now, come to the solution directly. So, how you can begin the solution? Write the heading journal entries. So, what is your format? Format is same as your journal: date, particulars, ledger folio, debit rupees and credit rupees. Now, we have in the application stage. So, the first stage is what? Application stage, where you have to record 2 entries. One is receiving of application money and the other one is transfer of application money. Now, receiving of application money. So, what is your journal entry? Bank account data to equity share application account. Now, what is the number of shares? Here you have to remember. So, even though they wanted 10,000 shares, but for how much the public have subscribed? 9,000. In the sense, we have received amount only on 9,000 shares, not on 10,000. So, we are not going to take this number of shares. Always we will take this number of shares, that is 9,000, because 9,000 is the actual number of shares in which the application money have been received. So, 9,000 into what is application money? 3. So, 9,000 into 3, so it will be 27,000. So, how you can write the narration? Being application money received on 9,000 shares at rupees 3 each. So, hope you are clear with the first entry. So, that is of receiving of application money. Now, what is the next entry? Transfer of application money to share capital account. So, what is the entry? Equity share application data, account data to equity share capital account. So, the whole amount has been duly received on application. So, how much they had to receive? That is 27,000 and they have received also. So, it will be 27,000 only. That is 9,000 into 3. So, how you can write the narration? Being application money transferred to equity share capital account. Hope you are clear with the first stage. Now, come to the next one, that is allotment stage. So, here also we have to record 2 entries. One is due, other one is receive. Now, what is a due entry? Equity share allotment account data to equity share capital account. You are going to transfer that allotment money to capital account, that is equity share capital account. So, you know the number of shares, as I told you, we have received only on 9,000 shares. So, you are going to take only 9,000, not 10,000. So, 9,000 into what is the value of allotment? That is 3. So, 9,000 into 3. That is equity share allotment account data to equity share capital. So, write the narration being allotment money due on 9,000 shares at rupees 3 each. So, I will get 27,000. Next entry is for what? Receiving of allotment money. So, what is the entry? Bank account data to equity share allotment account. So, same value. So, actual value they have received. What was the due value? 27,000. So, they have received all the full value. So, bank account data to equity share allotment. So, how you can write the narration? Being allotment money received on 9,000 shares of rupees 3 each and the amount will be same 27,000. So, this is about your allotment stage. Now, come to first and final call. So, this is a third stage. First and final call. Here we have 2 entries. One is due, other one is receive. Now, here also, what is the due entry? Equity share first and final call account data to equity share capital account. What is the number of shares? 9,000. What is the call money? That is 4 rupees. So, 9,000 into 4. So, 9,000 into 4, 36,000. How you can write the narration? Being first and final call money due on 9,000 shares at rupees 4 per share. So, this is a due entry. Next, we have to receive. Whether all the shareholders have given the first and final call money? No. Go through your question once again. So here they have clearly told, so 400 shareholders have not paid the first and final call money. Out of 9,000 shareholders, 400 shareholders have not paid the first and final call money. In the sense, 8,600 shareholders only have paid the first and final call money. So what is the journal entry? Your journal entry remains same. Bank account data to equity share first and final call account, but it will take only 8,600 shares. Why it is 8,600? Because all the 9,000 shareholders have not paid the first and final call money, because 400 shareholders have failed to pay the money. In this is 8,600 shareholders have paid the first and final call money. So record the entry for that. Bank account data to equity share first and final call account 8,600 into 4. So how you can write the narration? Being first and final call money received on 8,600 shares and 400 shareholders have failed to pay the first and final call money. So narration can be in your own words. So what is the amount? 34,400. Now we are done with the call stage also. Now, 400 shareholders who have not paid the first and final call money. So, for them, what the company have decided? To cancel these shares. So, to cancel that 400 shares, which is known as what? Forfeiture. For which we have to record an entry. So, this entry is for what? Forfeiture. Now, what do you mean by forfeiture? Cancellation of shares for not paying the money. That is known as what? Forfeiture. Now, what is your forfeiture entry? Share capital account data to forfeited shares account 2. On which stage they have not received? On equity share first and final call account. Now, for share capital. So, what is the number of shareholders? 400 shareholders have not paid the money. And so, for share capital, what is the actual value of the share? That is 10 rupees. So, 400 into 10. So, this will be the actual value. So, that will be transferred to share capital. 400 into 10, 4,000. Now, to forfeited shares account, what do you transfer? What out of 10 rupees, how much they have or how much the company have received? So, they have received on application and allotment, but they failed to pay on first and final call. Now, what is application money and allotment money? Go through the question. So, application money is 3 rupees, allotment money is 3 rupees. So, total 6 rupees they have received and 4 rupees on first and final call they have not received. So, to forfeited shares account, what is the actual value they have received? So, that we have to record. So, go through your solution. To forfeited shares account 400 into 6, what they have received. And to share first and final call, what they have not received, how much they have not received? That is 4 rupees. Correct? To equity share first and final call account. So, if you multiply 400 into 6, it will be 2,400. 400 into 4, 1,600. Now, write the narration. Being 400 shares forfeited for not paying first and final call money. That is of rupees 4 each. So, this is the entry on forfeiture. Now, after forfeiture, they have clearly given in the question. So, they have cancelled those 400 shares. After that, they have reissued. Reissued at rupees 9 each. They have given as reissued at rupees 9 each. Okay, so whatever the 400 shares which was cancelled, so it was reissued at rupees 9 each, for which we have to record the journal entry. So, what is the entry? Bank account data, forfeited shares account. Why this forfeited shares account? Because they have reissued not at par, they have reissued at discount. So, actual value was 10 rupees, but they have reissued at rupees 9. In the sense, 1 rupees is what? Discount. So, this discount has to be transferred to forfeited shares account. So, bank account data, forfeited shares account data to share capital account. So, 400 into 9, that is reissue price. So, it goes for 3,600, 400 into 9. Next, for forfeited shares account, you have to record the discount, 400 into 1, that is 400. To share capital account, 400 into 10. 10 is the actual par value of the share, that is 4,000. Hope you are clear with this entry. So, how do you record? Bank account, at what price they have reissued. Forfeited shares account, at what price they have given the discount. So what is the discount? That will be transferred to forfeited shares account. If it is reissued at premium, then your entry will be bank account data, to share capital account, to share premium account. If it is more than the face value, then it will be reissued at premium. Now here in this problem it is discount, so it will be transferred to forfeited shares account. So write the narration, being 400 forfeited shares reissued at a discount of 1 rupees each, or you can write it as being forfeited shares, 400 forfeited shares reissued at rupees 9 each. So this is about reissue. So this is the entry for reissue. And then last entry is for what? Transferring of forfeited shares to capital reserve. Now see here, what is the amount which is there in the capital reserve? That is 2,400. And here also, when they are reissued at a discount, what is the amount which has been transferred to forfeited shares account? That is 400. So the difference will be 2,400 minus 400. So that difference will be transferred to capital reserve. So what is the entry? Forfeited shares account data to capital reserve. So 2,400 minus 400. So how much it will be? 2,000. So this will be transferred to capital reserve. So how you can write the narration? Being forfeited shares account transferred to capital reserve. So hope you are clear with this problem. So there are only 9 entries. So all the entries, this chapter is very easy if you learn these 9 journal entries properly. Other than that, if they are issued at premium or if they are issued at discount, you have to make some adjustments. Other than that, all the entries are same, but you have to know how you have to put the amount for each and every entry. So this is about this problem. Now we shall go through one more problem. So here, issue of shares at a discount. Now normally, shares will not be issued at a discount as per the Companies Act 2013. So normally the shares will be issued at premium. It will not be issued at discount as per Companies Act 2013, but sweat equity shares can be issued at discount. Now what do you mean by sweat equity shares? For the own company's directors or for the own employees of that particular organization, for the work done in the organization as a bonus, the company can issue certain shares at a discount. So let us solve a problem. So in your examination, they will not ask a question where the shares has been issued at discount, because it has been prohibited to issue shares at a discount as per Companies Act 2013. Only the sweat equity shares can be issued at discount. Now what do you mean by sweat equity shares? The shares which is been issued to the employees or the directors of their own company for the work done in the organization, and as a bonus they are going to issue to the shareholders or issue to the directors or the employees of an organization. The company is going to issue for their own directors or employees. So they are known as what? Sweat equity shares. So normally sweat equity shares will be issued at discount. But don't worry, you will not get a question on this particular concept when the shares are issued at a discount. That is in your examination, because as per Companies Act it is been prohibited. Okay, now go through this question. All the entries are same, only few entries will differ. So go through this. Arushi Computers Limited issued 10,000 equity shares at rupees 100 each at 10% discount. Here they have given it is been issued at 10% discount. The net amount payable as follows. Now 100 into 10% in the sense it is 10 rupees. Correct? So the discount amount is 10 rupees. So this will be the discount. So 10 rupees is the discount. So 20 per application. So 20 on application and 30 on allotment. So it is been, how it is 30 on allotment? 40 will be the actual price minus there is a 10% discount. So 30 is allotment per share on allotment and 20 per share on share first and final call. So here they have clearly given. So how they have divided this 100 rupees? That is 20 on application, and here it should be 40, but they have issued at discount. So here 40 minus 10 will be 30 rupees, that is on allotment, and share first and final call 40 rupees. 40 plus 40, 80, 80 plus 20, 100, but they have issued at discount of 10 rupees. A shareholder holding 200 shares did not pay the final call. Now here also what happens, all the shareholders have not paid the amount. Here 200 shareholders failed to pay the final call amount. His shares were forfeited. So the company have decided to forfeit the shares, that is cancel the shares. All these shares were reissued to Mr. Rakshit at ₹75. Here also what they have done, they have reissued at discount. So reissuing can be done at discount, but normally the company will not issue shares at a discount unless it is a sweat equity shares. Give journal entries in the books of company. So hope you are clear with the problem. We shall directly go through the solution here. So first you will record journal entries. You know the format: date, particulars, ledger folio, debit rupees and credit rupees. And what is the first stage? That is application stage, where two entries have to be passed. One is receiving of application money, other one is to transfer the application money. Now what is the entry for receiving application money? Bank account data to equity share application account. Now how many number of shares are there? That is 10,000 shares. What is application money? 20 rupees. So it will not affect the application stage when it is issued at discount. So when coming to allotment, we have to make a separate entry. Okay, so 10,000 into 20. So as usual, you are going to record. So 10,000 into 20, that is 2 lakh. Write the narration being application money received on 10,000 shares of ₹20 each. Now after receiving, you will transfer. What is your entry? Equity share application account data to equity share capital account. So whole 2 lakh will be transferred. So whole 2 lakh will be transferred to equity share capital account. So clear about these two entries. So this is regarding your application. Now coming to allotment. So here you have to record the entry. So here there are bit changes in the journal entry. So in the allotment stage, you have to record the two entry. One is due, other one is receive. Now what is the due entry? Equity share allotment account. Now this is the changes. When it is issued at discount, you have to record this entry here. Equity share allotment account data, discount on issue of shares account to equity share capital account. So normally if the shares are there in the allotment, what is your actual journal entry? Equity share allotment account data to equity share capital. But there is a discount, so you'll write it as discount on issue of shares account. So if it is premium, then equity share allotment account data to equity share capital to securities premium. But since it is a discount, you will write it as discount on issue of shares account. What is the number of shares? 10,000. And what is the price? So what is the price here? 30. So they have clearly given it is 30. And 10 rupees is the discount. So I will transfer it as, how do you transfer? Equity share allotment 10,000 into 30. Discount is 10 rupees, 10,000 into 10 to equity share capital 10,000 into 40. So 10,000 into 30, 3 lakh, 10,000 into 10, 1 lakh and 10,000 into 40, 4 lakh. Now write the narration being allotment money due on 10,000 shares of ₹30 each after adjusting the discount. So we had a discount of 10 rupees also. So that is your third entry. Now receiving of allotment money, bank account data to equity share allotment account. So whether did we receive full 4 lakh? No. We have received how much? 3 lakh because 10% was a discount. 10 rupees was a discount. So we have received only 3 lakh. So bank account data to equity share allotment account. So we'll write 3 lakh here because we had given the discount. So we have received only 3 lakh. So how you can write the narration? Being allotment money received on 10,000 shares of ₹30 each. So hope you are clear with the allotment stage. Now come to the first and final call. So here also you have to make two entry. One is to due, other one is receive. Now here no changes you have to make. Only in the allotment stage you had to write that discount on issue of shares. Other than that, all the entries are same as usual. Now coming to equity share first and final call. First entry is due. So equity share first and final call account data to equity share capital account. What is the number of shares? 10,000. What is the call money? So call money is 40 rupees. 10,000 into 40. So you'll get 4 lakh. Now, whether all the shareholders have given the first and final call money? No. So there are certain shareholders, that is 200 shareholders. Now go through your question. So 200 shareholders have failed to pay the money. So the total number of shareholders was 10,000, out of which 200 shareholders have not paid the money. In the sense, 9,800 shareholders have paid the first and final call money. So you have to take only 9,800, not 10,000. So 9,800 into 40 will be the actual amount which is been received from the shareholders on first and final call. So record the entry. Bank account data to share first and final call 9,800 into 40, that is 3,92,000. So how you can write the narration? Being first and final call money received on 9,800 shares of rupees 40 each. So hope you are clear with this. All the 3 stages: application, allotment as well as first and final call. Next entry is for what? Forfeiture. Those 200 shareholders who have not paid the first and final call money, their shares are going to be cancelled by the company. So what it is known as? Forfeiture. So we have to record entry for forfeiture on this 200 shares. So what is your entry? Equity share capital account to discount on issue of shares account to forfeited shares account to share first and final call account. So go through this entry when it is been issued at discount. So you have to make changes in forfeiture entry also. So equity share capital 200 into 100 is the actual value. But there was a discount, correct? So that discount will be transferred here to discount on issue of shares account 200 into 10 to forfeited shares account. How much they have actually received? 30 plus on application. So 30 is on allotment. How much was on application? That is 20. So 30 plus 20. So this is on allotment and this is on application. So 50 rupees they have received. How much they have not received? So 40 rupees they have not received on equity share first and final call. Now your entry will be simple. Equity share capital account. How much is the total value? 200 into 100. That is 20,000. Discount 200 into 10. That is 2,000. Next, forfeited shares account. So how much they have actually received? Application 20 rupees and allotment 30 rupees. So total they have received 50 rupees. 200 into 50. That is 10,000. To equity share first and final call. In first and final call they have not received 40 rupees. So that will be transferred to equity share first and final call. 200 into 40. That is 8,000. Now write the narration. Being 200 shares has been forfeited for not paying first and final call money of rupees 40 each. So this is a entry on forfeiture. Next entry is on reissue. So this 200 shares which is been cancelled have been reissued at rupees what? 75. In the sense 25 rupees is what? Discount. Okay. So we have to write the entry. Bank account data 200 into 75. So they have reissued at rupees 75. That is 15,000. But they have reissued at a discount which has to be transferred to forfeited shares account. Forfeited shares account 200 into 25. That is 5,000. To share capital account. What is the actual value? 200 into 100. That is 20,000. Write the narration. Being 200 forfeited shares reissued at a discount of rupees 25 each. Or you can write it as being 200 forfeited shares reissued at rupees 75 each. So this is an entry on reissue. Now what is your last entry? Whatever the amount, excess amount which is there in the forfeited shares account, it has to be transferred to capital reserve. Now go through your entries. In forfeited shares account, we have how much? 10,000 here. So we have 10,000 here, that is in forfeited shares account, and here we have 5,000. So 10,000 minus 5,000. So the difference amount will be transferred to capital reserve. So forfeited shares account 10,000 minus 5,000, that is 5,000 to capital reserve. So forfeited shares account data to capital reserve, that 5,000 will be transferred to capital reserve. Write the narration. Being forfeited shares transferred to capital reserve. So hope you are clear about this problem. So this is a problem where the shares are issued at a discount. As I've already told you, normally the shares are not issued at discount unless it is a sweat equity shares. So this is all about this chapter, very important for 12 marks, and even you can expect a 2 marks question on this particular chapter. So just you have to go through all the journal entry, but you have to know how you have to put the amount for each and every journal entry. Very easy problem and very easy to score, and I always suggest you to solve this problem because you need not have so many calculation. Just you have to record the entries and put the amount to respective entries. No need of calculations here. You will not have lot of calculations. At the same time, you can save lot of time by attempting this 12 marks problem. So my dear students, hope you are clear about this today's session. See you all in my next session with a new chapter. Till then, take care. Thank you.